South Africa President Cyril Ramaphosa, in his opening remarks to G20 finance ministers in Cape Town, has called for urgent attention to the debt burden and higher costs of borrowing for poorer countries. Meanwhile, the International Monetary Fund, MD Georgieva Kristalina, also charged ministers at the summit to be efficient in improving tax compliance and judicious in spending revenues before asking for higher taxes. And also, Nvidia has topped fourth quarter revenue and earnings estimates, also giving a decent future outlook. Hello, welcome to Global Business Insight, where we look deeper at the main business stories. Today in this special episode, we focus on the ongoing G20 meeting in South Africa and Nvidia results that just came out yesterday. For low-income countries, Gen AI, according to a recent IMF blog, now offers new opportunities to drive organizational reforms and leapfrog into the most modern systems. For example, in Madagascar, the Customs Authority now wants to use Gen AI to improve risk management, combat fraud, and increase revenue using data accumulated over 10 years to train its system. New technologies can enhance the relationship between governments and citizens, and we now have tax portals, customs, IT systems, and online services already simplifying interactions with public authorities, reducing bureaucratic hurdles, and increasing transparency. Generative artificial intelligence, Gen AI, is emerging as the next transformative force, opening possibilities beyond simple automation. At the ongoing G20 meeting of finance ministers and central bank governors in Cape Town, the IMF MD Georgieva Kristalina charged ministers in emerging economies to do more to first strengthen their capacity to get better compliance and efficiency in the revenue management process before proposing sweeping tax hikes on their tax-paying households and businesses. The International Monetary Fund MD said the Cape Town event was staged against a backdrop of high levels of debt and the need to mobilize effectively, and equally important was the ability to spend tax revenues much more judiciously. In his opening remarks, the President of South Africa, Cyril Ramaphosa, reiterated the need for a fairer world, requiring a different approach where none are left behind, focusing specifically on rising debt levels of poorer countries, resilience in the face of disasters, helping poorer countries combat climate crisis, and getting more inclusive growth.
In recent years, low and middle income countries have seen their levels of foreign or sovereign debt and the costs of financing that debt rise substantially. The combined external debt stock of low income countries more than doubled in the decade to 2022. Debt service costs are increasingly crowding out spending on education, on healthcare, and other social services, as well as infrastructure that are needed for the economic development in those countries. The work of the International Financial Architecture Working Group and other working groups will be particularly important in improving the common framework for debt treatment, accelerating the reform of multilateral development banks, and strengthening capital flows to emerging markets. Our G20 presidency will be addressing the high cost of capital faced by developing economy countries as one of the main barriers to sustainable growth. The G20 must show leadership in addressing the imbalances that persist in the global economy and filling the significant gap in funding required to achieve sustainable development goals. The third priority of South Africa's G20 presidency is to mobilize finance for the just energy transition. Significantly, more funding is required to limit global temperature rise in line with the goals of the Paris Agreement, and to do so in a manner that is equitable and just. South Africa has pioneered the use of country platforms to coordinate funding through the Just Energy Transition Partnership. We continue to advocate for greater concessional and grant funding to support the energy transition in developing economies. G20 member countries should lead the way in demonstrating ambition on climate action in the lead up to the COP30, which will be held in Brazil later this year. The fourth and last priority of South Africa's presidency of the G20 is to harness critical minerals for inclusive growth and sustainable development. We need a G20 framework on green industrialization and investment that promotes value addition to critical minerals that are close to the source of extraction. We need to promote the development of low-carbon manufacturing value chains, which can support decarbonization while promoting growth. As minerals extraction accelerates to match the needs of the energy transition, the countries and local economies or communities which are endowed with these resources must be the ones that we count amongst those who should benefit. Hitherto, many people have just seen the benefit flowing out of their own impoverished countries, going to more developed economy countries. We therefore need to balance. In undertaking the work of the finance track, we seek to ensure continuity with past G20 presidencies. For the first time, the G20 is being hosted on the African continent. Now, for us, this highlights the growing importance of the continent in global economic and political discussions. Africa is home to some of the world's fastest growing economies. It has a young and rapidly expanding population that is embracing technology and innovation very, very quickly as well. At the same time, Africa faces several challenges, such as the effects of climate change, yes, widespread poverty, and high levels of debt, and the remnants and the legacy of what happened to it during colonial rule in the past. Rather than, yes, belabor all that and blame all that on others, we are saying we want to take responsibility and we want to work with the world to make sure that we address these challenges. The summit's location underscores the need for African voices to be heard on critical global issues like sustainable growth, the digital economy, and the green industrialization process. We must focus the world's attention on the opportunities for more rapid, inclusive, and sustainable growth in Africa. And I'd like to suggest that when Africa grows, so does the world also grow. In doing so, let us raise our ambition. Let us lift our gaze to deliver on the promise of growth and prosperity that this organization was founded for. Growth for all countries and for all the peoples of the world. And this, I believe, is the real mission of the G20.
And just as the South African president is going on about greener industry, BP has abandoned a radical attempt to reinvent itself as a green energy company, finally yielding to pressure from investors after its aggressive shift away from fossil fuels over the past 5 years backfired. BP Chief Executive Murray Auchincloss said yesterday that it would increase oil and gas spending by a fifth to $10 billion a year and cut expenditure on renewables by 70%, also ditching its targets to cut fossil fuel production and develop 50 gigawatts of renewable power. US stocks closed mixed yesterday after Trump held his first cabinet meeting, and investors braced for Nvidia's performance, their results, which beat on both the top and bottom lines. Nvidia met most expectations as it reported solid earnings and provided a decent revenue forecast for the April quarter. The major pluses were: first, earnings per share of 89 cents and revenue of $39.3 billion both came in well ahead of estimates. Second, the outlook for the current quarter committed to a revenue forecast with a midpoint of $43 billion, also above consensus of $42.1 billion. And also, the impressive performance of the new Blackwell chips architecture, which was expected to struggle given the complexity of the new design. Instead, it beat the target, delivering $11 billion of revenue in Q4. Chief Executive Officer Jensen Huang said in the company statement, demand for Blackwell is amazing. There were a few issues of increasing concern. Margins seem to be under pressure for the current quarter. Nvidia sees gross margin of 71%, which is slightly under previous estimates. Then also the percentage of revenue from a small group of customers, so-called hyperscalers, Microsoft, Amazon, and Google, accounted for over 50% of data center revenue, up from 45% in the previous quarter. Analysts, of course, want that number to go down. Finally is the exposure to tariffs and to the US-China trade squabbles. If exports to China are held back by further trade curbs, then of course that will hurt its position. After being up 3.67% when markets closed, pre-markets, we saw Nvidia stocks continuing its ascent. The world's biggest automaker, Toyota, said its global output for January increased 6% year-on-year to 781,729 vehicles, with domestic production up 22%, also offsetting an overseas production decline. This was the first time its worldwide production has risen in a year in January as it ramped up output after recovering from last year's certification scandal. Japan Post Holdings announced plans to sell its shares in Japan Post Bank in a secondary share sale worth as much as 630 billion yen. That's $4.22 billion. This was according to a regulatory filing showed today. The euro weakened today as President Trump late yesterday reaffirmed plans to enforce 25% tariffs on Canada and Mexico and add the European Union to the list of nations to also face higher tariffs. Asia-Pacific markets were mixed after key Wall Street indexes rose despite fresh tariff threats from US President Donald Trump. Oil steadied near the lowest level we've seen this year, also with tariff threats and supply issues in focus. Brent crude in early London trade was flat at $72.76 a barrel. Well, that's it on this episode of Global Business Insights. You can watch us on Business Day TV YouTube channel Monday to Friday at 11 West Africa time. Thanks for watching. This is Bode or Shosami. Bye-bye.